For you delivering on this channel for educational purposes only, is not intended as financial advice. Macro Monday, let's take a look at some legacy charts and economic data. First, we'll look at the global flows report from James at CoinShares. Worst streak on record, 6.4 billion out in 5 weeks. I gotta say, you'd almost think we'd be lower. I don't want to jinx it here as we start to stabilize around 84, but so far so good. It has been very brutally negative over the past couple weeks here. Big outflows for BTC, obviously, also Ethereum last week, and not really much love anywhere else. Germany, some inflows, oddly, but not much going on. Lots of red, lots of outflows, and yet here we are, still at 84. If we look at the 30-day cumulative flows, clearly we are in the red here over the past 30 days, and it makes sense that we're seeing prices go down. Not every dollar in or out of the ETFs is net long or closing a long or whatever. Some of that is the basis trade, but we've had a decent chunk flowing out. There's still around 36 billion sitting in the ETFs, but it is a decent chunk. If we look at gold real quick, we see the opposite. We see mega inflows for gold into the ETFs that might be somewhere around an all-time high in dollars, in inflation adjusted something. It's quite a bit for gold, and that's why you're seeing gold continue to push higher. No surprises there. Looking at the basis, we're still hovering around 6 to 8%. We may have seen as much OI come out as we're going to see unless we start to tick lower, sub 80. OI basically reset. This is November 5th, 11.15. We got down to 11.17. So most of the OI, dollars wise, on futures has reset to the November 5th level. But until April 2nd, when the tariffs get put in, I can't imagine. Most people are just, waiting. They're bracing for impact on the 2nd, maybe making decisions on the 3rd or the week after. So we're probably going to see mostly nothing until April. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Paired Ventures Inc., PBI, DBA, Kraken. On BTC on the 4-hour, we are trying to curl higher-ish into the cloud here, but really there's not really much to say. At the very least, you would want the 4-hour cloud to flip fully bullish, and we are probably a week away from that. If I had to guess, anything above 86, 87, 88, and we'll get there quicker. But otherwise, really not much going on. We do have this IHS possibility into April, into Q2. Maybe the tariffs aren't as bad as people are expecting. Maybe there's some compromises there. Part of this is trying to figure out how could we get to where the chart might be leaning eventually, but it's way too early to call this. Certainly in bearish territory on trend metrics on the cloud there. I mentioned meme coins last night just because they are so oversold. If you're looking for something to do, I posted this on Twitter today. There is this pretty decent case for an inverted head and shoulders. This will probably flip bullish on the 4-hour before BTC. It may lead BTC a little bit, but it's pretty clear. It's been bearish for a few months now. And if this chart can start to look a little better on the 4-hour, then maybe that's a trade someone's willing to take. But collectively, not much going on. Sol just sort of meandering around the 4-hour cloud. ETH, I'm sure, the same. Really nothing going on the crypto side. Not yet, anyway. Not until BTC starts to look a little bit more exciting. Economic calendar this week is JPOW on Wednesday. Another reason why market's probably just waiting to see what he has to say. Is he going to be dovish, hawkish? Is he going to talk about ending QT? Probably not. I just assume more of the same status quo until the numbers look bad enough where they'll want to cut, and that would be in the jobs data. If we see it, we're starting to see some retail numbers look not as good. We're starting to see consumer confidence look not as good. But I doubt that's enough for them to move the needle on anything they care about. So that's 2:30 Wednesday. be there or be square. On the meeting probabilities, not pricing in a cut here, no surprise, or a hike for that matter. And the next cut isn't priced in until June at this point. And that's probably another reason why markets are just waiting to see what happens in April, waiting to see which tweets or truths come out of Trump's fingertips to determine the direction of the market. Doesn't seem like they care where things are going here at the moment. So you got to just sit tight. And of course, inflation expectations are rising, but inflation on a real-time basis is still below 2%. It is up a little bit over the past week, but this is basically pre-tariff. There's some of the tariffs I think that are being implemented or have been implemented, but really this data is going to matter after April 2nd if a majority of those tariffs, reciprocal or otherwise, go into effect. Then we get to really see what the actual data is showing us rather than inflation expectations. If we look at the nowcast for March, we're putting in a 2.46. Last month was 2.8. We're putting in a PCE of 2.07 with 17 days in the month. And this is a massive jump lower. I see people tweeting about core PCE. Okay, fine. You know, these March numbers don't come out till April, which is another reason to pay attention to what happens to these probabilities in May. Do we get a shift in May if inflation starts to look good enough on the numbers and maybe we start to see some uptick in unemployment? But a lot of this is going to take some time to work its way into the data eventually when we start to see it. And there's no meeting in April. So that's why on top of all this, add on this IHS possibility. It makes more sense that we do nothing until April, May than doing anything now until then, just because there's a lot of open questions still on monetary policy. So inflation is headed in the right direction. That's good to see. And PCE way down with some early data on those numbers. If we look at the New York Fed's 1 year ahead uncertainty, CPI, whatever, it's around 4%, 3.9. Not the direction they want to see it. But it is certainly better than the UMich survey, which is all over the place. 6.5 for Democrats, 0 for Republicans, 4.4% for independents. It seems a little silly to take this seriously, but it exists. It's a known survey, and people look at this sort of thing, obviously. But there's no agreement here on direction, and it's purely political, purely partisan. So to me, this survey takes a backseat to some of the other data. We also have the Atlanta Fed GDP now estimate, which is still negative 2%. Backing out the gold stuff, the gold imports, you get around 0.4%. So it's not 2%, but it is still positive. And if you look at the New York Fed's estimate for GDP, it's around 2.7. So it's hard to know what to take seriously here. Do you take some of these surveys serious and not the others? Are we going to get some surprise GDP number where no one's expecting it to be positive because of the nowcast being so negative? That could be one way to surprise the upside whenever this number officially comes out. I'm not actually sure. I'd have to check on that, but something to watch. You know, do we get a surprise positive number for GDP if we're looking for bullish things? On the reverse repo front, we're not seeing too much headway as far as money coming out of the reverse repo, but we are seeing the Treasury General account down around 200 billion. So that has been a liquidity positive. And as this chart shows, if you put the US liquidity equation together, it's the Fed balance sheet minus TGA minus reverse repo. We've really been in this holding pattern in US liquidity since June 2022. It's been pretty wide and ranging, but it hasn't really definitively gone anywhere. And this could be why part of the reason BTC has kind of struggled. It struggled last year in 2024. It's struggling at the current all-time high. It struggled at the current all-time high. And it needs that liquidity effect on the US side or globally. We know global liquidity is rising. But looking at this chart, there's really been 3 moves in a couple years. There's been the pre-ETF move, the post-ETF move, and then the US election. Now, there's been a lot of ranging in between that, but those are the 3 moves that have been the big ones. So the question is obviously what's going to be the next catalyst here for liquidity or BTC? Will it be gold finding a top? Will it be more global liquidity? Will it be more US liquidity? Will we need to see lows first? Will we need to see more bearishness before the printer gets turned on? but there's certainly been a divergence between BTC and global liquidity since the ETFs launched. Sorry, US liquidity since the ETFs launched. So ending QT would help this liquidity picture. So it's definitely something to watch for on Wednesday. Now, DXY has been declining significantly. That has helped global liquidity. Crypto should be happy here, but it's not. It's not as happy as you'd think it would be. Should the dollar continue to fall, at some point, this divergence will be so great that people will look for anything. I think at some point, the gold BTC divergence will also be so great that you'll start to see BTC pull up easier than gold. At some point, you're going to see China-US differential that's so great that you're going to start to see money stay here, stay home for a little bit. We'll take a look at some China charts. But there's a lot of jostling around right now. And if we sniff anything below 101, then I'd expect BTC to break 94. So this is something else to watch into Q2. How weak does the dollar get into Q2? And does that align with that inverted head and shoulders possibility? It very well may. So although I don't have great news today, there's certainly a plan for how we get there, how we get out of this funk sub 90. So this is certainly bearish, no doubt about it on that. On the bond stuff, the bond ETFs, nothing here really screaming at me. Shy, the 1 to 3 year, looks probably the best amongst them. Ag looks fine. IEF looks okay. TLT still below the cloud there. These are all kind of teeing up for an inverted head and shoulders on lower time frames. So we'll see if they can break those levels. On the risk side, you almost don't want these to break out, because if these break out, it probably means death for risk assets. So you can't really root for this stuff to do well. You really shouldn't be, unless it's a hedge. If it's a hedge, who cares? Or if you're in cash, you want this to do well. If you're in this stuff, you want this stuff to do well, obviously. But how low can they really get the 10-year yield? And how quickly is the question. But collectively here, just neutral ranging, nothing that bullish just yet. 10-2 yield curve still positive, is uninverted. Unemployment at 4.1 down there. Not really much going on here either. We're just sort of waiting for the numbers to get worse. Honestly, there's an expectation of recession based on the uninversion here, but we'll see. It's going to be hard to beat that. And if GDP comes in negative this quarter, then I'd think there'd start to be some panic in the markets. Not that there's anything wrong with a negative GDP or that recessions are an impossibility. It's just, do you want to be fully max long when that potentially happens? On the energy front, gas still coming down 307 on average, and that is significantly down from the prior 3 years. Interesting chart. Still sort of looking at this XLE chart. For me, it's acted as a hedge. It hasn't really gone anywhere one way or the other since 2024, right? The cloud here is unimpressed. The chart pattern is unimpressed. But for whatever reason, let's make M&A great again or whatever. If this thing can get above 94, then XLE starts to do better, most likely. But much like the bond stuff, you probably don't want the energy stuff to do well if you're bullish crypto. So it's definitely a case of be careful what you wish for, because if energy starts to take off, then the inflation expectations get worse. And then we go from cuts to hikes, and it's just, everything's a mess again, right? But this chart looks fine. It doesn't look impressive. It looks fine. On the gold side, I had some questions for people like, what's the target here? Where could this go? In the near term, the previous range was 2,800 to 2,500 effectively. Measuring that higher gives you about where we are now with a little bit more upside. So the measured move tells you you're about there. Using the Williams fractals, which have not done super well, if we look back here in October 24, you get stopped out here, it goes higher. You get stopped out here, it goes higher. So they haven't done great on a daily, but currently that's all the way down here at like 2,900. So one way to play this would either be to wait till the maximum measured move or just watch a trailing stop loss and do nothing, because so far so good. I mean, this is another new all-time high for gold. I'm sure at some point there's going to be a divergence on this, but it looks okay. Doesn't look bad. The other issue with expecting like 5,000 on gold or gold to keep going is you're also reaching the decade-long cup and handle target, 2,600 to 3K. So yeah, it can keep going, but it's probably at some point going to need to consolidate. Now it goes through these periods of just continuous markup for years, so we may be in that period, but as far as TA expectations. I don't really know what else you can look at that gives you a target up here other than just using a trailing stop loss. That's probably going to be your best bet. Nothing says this can't go to 10 or to 6, right? It doesn't matter. It can go wherever it wants to go, but looking at the technicals, this was the range, this was the level. The moment the breakout occurred in 24, this was what the technicals wanted. So we're there. On the equities front, earnings this week, not too much going on. I'd imagine we'd get some interesting comments from Darden restaurants about the consumer and how they're doing in spending. Can't imagine it's great. They do like Olive Garden. I think at one point they had Red Lobster. They have a bunch of restaurants. We have Micron. We have some Chinese stuff, PDD, XPEV, Five Below, another consumer low-end retail store. Watch for some comments there. But nothing else really sticks out to me. Bitcoin ATM, BTM, terrible chart. I looked at that one before the video. NEO also at the end of the week. FedEx, Nike, those are probably interesting to some people as well, but not too much going on. On the SPY last night, I talked about the importance of holding this level and just not going lower. This stuff doesn't need to break out imminently, but it's starting to look better. And that's kind of the most you can ask for after the massive move down. So much like BTC or Solana or ETH on the 4 hour, on the 30-minute for the SPY, still bearish, leaning more neutral, trying to pull up, trying to normalize this level. If we don't hold 555, we probably go to 500 on the SPY. And if we go to 500, BTC probably goes to 6,500 or 7,500 or 70K, whatever it is. BTC is not going to randomly hold 80 if we break this level. This is recoverable, but you're going to need another week after this week. Sunday's close is what you're going to need to see whether or not we're able to hold this level from a Dragonfly perspective. That was last week's candle. We bounced on the pivot. We bounced on the weekly Kijun. So it's possible we see some sort of bounce. And this doesn't get bearish until it gets into the cloud. But I don't think any of this is a screaming buy on high time frames. We are seeing the VIX get crushed, which is good for risk assets. Anything below 20 is where we want to live. And it's come down significantly since 30. So we'll take that for now. Q is very similar at the yearly pivot. Huge downtrend on the 30-minute, trying to stabilize and normalize, but still in neutral territory for now. So that's something to watch throughout the week. On the weekly cloud, same deal. Dragonfly last week on the Kijun, on the pivot. Can this hold? Will this close green? Will it close higher than last week? Stay tuned. But again, I don't think it's a screaming buy just yet. You'd want to see some strength on lower time frames. And if this doesn't hold, it's probably 420. That's probably the level on the way down. On some sectors here, the Mag 7 ETF, certainly not bullish. If anything, this just looks like a vanilla bear flag down here. It doesn't need to keep going. It's just the expectations are such that you don't expect this to do well until it's bullish on trend metrics again. And this is, of course, competing with the China stuff, which looks the opposite of this. It looks bullish, continues to look bullish, continues to make highs. So the outlook here is not higher highs for Mag 7 collectively. SMH also just looks lethargic. This is semiconductor ETF. Really nothing going on here since the beginning of 2024. Not too much has happened. So to me, nothing really to do there. IGV, the software ETF, broke out of its cup and handle, never reached the target, gave all of that back, and is back at the breakout point. Maybe something to watch here around 88. But nothing super exciting really anywhere until you start to go elsewhere. International, this is China, FXI. Certainly not bearish. FXI looks great. CQQQ looks great. Certainly not bearish. Are you late? Is it early? Where can this go? It looks better than the US, right? I think that's about all you can say. This could be a multi-shoulder, multi-headed, inverted head and shoulders. This could just fail here because it's communism, right? Who knows? But the charts specifically look better than anything in the Mag 7. And this is KWeb. Looks great. I'm sure there's some sort of like Chinese EV ETF that also looks great. And it's hard to argue when this stuff has based for multiple years and is starting to finally make highs. Looks very good. Looks very compelling relative to US. One outlier here would be Intel on the US side. I don't think this is enough for me to care about it, but they did replace their CEO and has been basing for a few months now. Maybe some sort of Wyckoff accumulation down here? Possibly. I'm no Wyckoff expert, so you can let me know in the comments, but Cloud likes it on the daily. maybe something else to watch on the chips front if you don't like trading China. That's just where the strength is right now. I'm sure there's other international charts that look pretty good relative to the US. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.